Good morning, everybody. So obviously today's topic will be focused on China. So we'll discuss the outlook on the yuan, so a significant trend reversal seen this week. Then we'll see the impact of Chinese stocks on the US and European stock markets with a focus on the S&P 500 and the Euro Stock 50. And we will end with an update on what's happening on gold. So if we first start with what's happening on the Chinese currency, so here you have a chart of the US dollar against the renminbi. So when the chart is rising, it means that the US dollar is rising against the renminbi, so that the Chinese currency is falling. And the reverse is also true. Here you have a strengthening of the renminbi and a decline of the US dollar. So what we can see right now is that after a very bullish year for the US dollar against renminbi, we saw a significant recovery of the Chinese currency until February. So this was this part. Then after that, a period of very quiet of stabilization on the cross. Then this week a significant upside breakout, so you can see the technical breakout here, which is rather bearish for the Chinese currency. So we can see some similarities between what happened this week, so this breakout above the upper part of a base formation, and what happened in Q1, Q2, let's say the first semester of last year. So a significant upside breakout, and which marked the start of a significant rally of the US dollar against the Chinese currency. So we can see right now that there is a new risk appearing on this chart, which is the potential start of an uptrend on the US dollar against the Chinese currency, which is something really new right now. We can see that there is a significant risk of seeing persistent weakness of the yuan. Persistent weakness of the yuan is, of course, quite negative for local stock market. So we saw this week a very steep sell-off on all Chinese equities. And it's, overall, it's quite bearish also for most risky assets, because when the yuan is depreciating too much, usually that's a bad signal for world stock markets. So a pretty interesting trend change here, and something to closely monitor, obviously, in coming weeks or even months. In the short term, we see here obviously the major impact on US equities. So a significant technical breakdown after the S&P 500 hit new highs last week. So this is something I commented previously. And in just a couple of days, we can see that we already started the most significant correction of the year on US equities. So this is already, in just a couple of days, the strongest setback so far this year. If we look at potential downside targets, Fibonacci supports, we can see that it's pretty obvious from a technical point of view. The initial support for a correction is a bit lower. It's around 2810. And you can see also that the 2800 area, which is here, is a quite important pivotal zone since a long time, and a potential support zone in the event of further weakness. And just below this level, you have also the 200 moving average, which is at 2775. So we can see that the real support zone, the most important support zone in the event of a deeper setback, is around 2800. So a very powerful support zone, which can be compared to this support zone when we had the initial sell-off of September, October of last year. So overall, I would say that even though prices are probably a bit oversold right now, and due to start technical bounce, there is a risk in coming weeks to see further weakness, additional weakness, back to the 2800 area on the S&P. From a medium-term point of view, it's too early to call for the start of a major trend reversal. I mean, so far we are seeing a pullback within what still looks like an uptrend, and we will need more time to assess the significance of the trend reversal. If we now switch to the Euro Stoxx 50, a similar move, so already the most significant correction seen so far this year. And what's quite interesting is that we had a correction from an important resistance zone, which was the 76.4% retracement of this entire decline. So ultimate Fibonacci resistance. And after that, we saw a very steep setback this week, with the index retracing more than 23.6% of its this year advance, which is a quite very significant move, which proves that probably the Euro Stoxx 50 went too far too fast. We saw that the last move up was probably exaggerated, and what we are seeing is more something like a mean reversal after a strong advance, probably too strong. What we can expect in the near term, I mean, once again, there could be some technical bounces because the market dropped too far too fast. But anyway, I think there is a higher probability of seeing the decline extending to the next important support zone, which is around 3,300. So you can see that it's a Fibonacci support, the next one. It's also a pivotal zone. You can see very clearly this pivotal zone, and it's also the 200-day moving average. So we can see a lot of support in this support zone, and ideally a target for the coming week if the correction continues. Last point I wanted to discuss with you is what's happening on gold. So we can see, I wouldn't call that a bullish reversal, but we can see that gold failed to accelerate downwards after breaking below an important Fibonacci support and Chartis support zone around 1275. And we can see that especially gold failed to reach the next important support zone, which was around 1250, 1255. So this did not happen. We can see as well a nice daily MACD buy signal, which is more or less the reverse of what we are seeing on stock markets. So overall, a stabilization of gold prices, and I wouldn't call for the start of a major bullish reversal yet, but we can see that gold prices are likely to test an important resistance zone in coming weeks and possibly try to break out above the 1,300 area, which would be, from a technical point of view, quite bullish short-term signal and would confirm the recent stabilization process. So this is obviously what I would like to see and something to closely monitor in coming weeks. Have a very nice trading day and a nice weekend.